And so first and foremost, we're going to talk a little bit about the different financing options that are available for your business. And primarily that's dependent on the stage in which your business is operating at. We will then, we become very familiar with our juice shop. And so then we'll have an opportunity to think about, in terms of our juice shop example, what would be some of the financing options if we wanted to grow and expand that business. And then you'll have an opportunity, I think, to take a look at your own example in your own business and consider what are the options that you may have for finding funding and financing your business based on your own experience in your own business. After that, we will have an opportunity to review with you. When you do get to a point where you're prepared to receive financing from a financial institution, we'll share with you what are the 5 C's that you can focus on to help provide a financial institution a really good picture of how your business is performing and how feasible it is for you to, as a business owner, to accept and take on more debt. And so we'll talk about the 5 C's of credit. And we have some post-work and opportunities for you to kind of think about as you go through your learning to continue to grow and explore these ideas. So just a quick technology check. I know I recognize some of the names here. If you're able to, just turn on your video and mute yourself. And I just want to make sure that you've received the pre-work packet from Zach. If you haven't, a lot of the post-work that we're going to talk about is included in that post-work. And so I just encourage you to look for that email in your inbox so that you have it with you. And then you'll see here, you can interact through the chat if you're able to. I know some of you are either driving or working, but if you're able to kind of engage with us through chat, we kind of get a sense of what your questions and comments may be. Once again, a quick review of our virtual session. So, you know, the purpose of these sessions is to kind of connect with other small business peers and be respectful of contributions. So we're going to be, you know, please feel free to engage and ask questions as you may have them. If you can keep your video on and mute yourselves unless you're speaking, that can make sure that our recording is really clear for when we replay it. And we're only together for 90 minutes. So I would just encourage you to, as much as possible, immerse yourself in this learning. So having said that and taking care of all of our housekeeping things that we had needed to think about, the next step is for us to kind of consider when it comes to, you know, thinking about our business. A lot of the times we go from having a business idea to a thriving business. And so in order to have a thriving business, we want to make sure that we have the right conditions and resources in place to be able to do that. If you're not able to put your video on, that's fine. That's fine. So we're going to use this analogy regularly throughout this session. But as we think about financing options for your small business, we want to kind of start thinking about this analogy of a little seedling, and eventually with the right conditions, the seedling can turn into this beautiful big oak tree, right? And so what does the seedling need in order to help it grow into that beautiful tree? So can you use the chat or take yourself off mute? What do you think are some of the things that the seed needs to grow?
Water, sunlight, nutrients.
Yeah, absolutely. Exactly it. Sunlight and water. So in the right conditions, you know, we can take this little seed and make it into a beautiful, beautiful tree. So the same may be true. We can apply this analogy to your business, right? And so you can start off with this great idea that provides either a service or a product to a customer. And in the right conditions, if you create the right conditions, you can have a really thriving business. And some of those conditions that we've talked about so far already within these classes and these trainings, we've talked a little bit about creating a strong business plan so that you're clear on what your strategy will be, you're clear on what you're hoping to achieve, the customers you're trying to reach. You also need to have very strong network of support. So having a mentor and having people that you can bounce ideas off of is really helpful. But the other ingredient and the last ingredient that can really help take your business from an idea to a thriving business is capital, right? And so as a business owner, as a small business owner, if I want to scale, grow my business, I need to have cash. I need to have the resources to be able to do that. And so today we're going to think about what are the avenues that are available to small business owners in order to help your business grow. And I see some comments coming in here. So Cameron said, you know, there are many instances when things are taken for granted and they're absolutely essential for growth. So you're completely right. So you need all of these things: a strong business plan, mentorship and support, and capital will help definitely take your business to the next level. So let's begin then by taking a closer look at what are the financing options for small business owners. What are the things that we need to be mindful of as we're looking to raise capital to help our business, propel our businesses forward? So one key thing that we need to be aware of is that depending on the stage of business that you're in, there may be different options available to you, right? And so if you look with me at this particular slide, one of the first steps in understanding what your financing options are is you need to consider what stage your business is currently in. And depending on that, your financing options can range from traditional to non-traditional, and your lending sources where you may be getting your money can also be non-traditional and traditional as well. So if you're in the aspiring entrepreneur stage and you have you're an emerging business, you may rely very heavily on self-financing. So tapping into your savings, getting gifts, or just tapping into individual investors like friends and family to really help propel your idea forward. And so this kind of financing options at this stage, when you're just starting out a business, can often be non-traditional financing options, right? And so let me ask you the question. I do see a question coming in the chat, so I'll get to your question in just a moment. But let me just ask you a question. Why do you think so early on in your business you may have to rely on non-traditional sources of financing versus coming into a financial institution? Why is that so important for us to consider?
Because you haven't established yourself as somebody earning money in that arena. So it's a risk to banks or people that provide funding for businesses. Startups is very risky on their part.
Yeah, exactly. So, the way that the financial institutions will look at this is if you're newer business, there's still a lot of learning that needs to happen, and there's still, oftentimes as small business owners, if you're just starting out, there's a lot of trial and error. You have to figure out what your plan is, who your target customers are, and so and many times you're using your savings or tapping into friends and family for additional funding. And so to add on to that and put some additional debt on someone is not only risky, but it's also really it could overwhelm the whole operation, right? So it's important to kind of remember it in that way, right? So, and I see some comments coming in here. Businesses consider seed money as an indication of whether their business is viable or not. It doesn't want to take that initial risk. So it's true, right? We need to see how the business would be performing before more traditional funding is considered. So then when your business begins to grow and mature, you may then have, and there's more of a record of how the business is performing. As you establish yourself a little bit more, you may see a mix of, lines of credit or a business credit card. You may have some loans available that you may qualify for, or alternative financing from both traditional and non-traditional. So you can start to kind of see that mix coming in as small businesses start to grow and mature. And so the most common one from our perspective is like a business credit card might be something that's a nice source of funds for a small business that's beginning to grow and mature. And then the last thing, as the business then becomes more established and successful, you may have broader access to more traditional financing options like, loans, lines of credit, investments, and then also having financing from more traditional sources like financial institutions. And so the key here is to really think about at what stage is the business in, because depending on how long you've been in business and how the business is performing, you will see different financing options available. And so that kind of brings us to kind of thinking about how do we know what our stage in and what the financing options are available to us. So if you look at this particular chart, and we're going to come back to this quite a bit as we go through the afternoon here. So again, you'll see we're kind of digging deeper. So when you're in the idea stage and you're in the startup stage, getting your business up and running, a lot of that is financing is coming from your personal savings, family and friends. And then we are going to talk more about crowdfunding and different investing options that are available. But you'll see as your business matures and gets more established, you definitely have access to more resources to getting your funding for your business. So the critical thing is as you start to kind of think about this is to start to consider at what stage your business is currently in, right? And as you're starting out, you're going to have a pretty significant personal contribution that gets your idea up and running. So let's take a look at some of these options a little closely. And so as we just mentioned, for startups and businesses that are kind of in the idea phase, a lot of the financing comes either from your personal savings, family and friends, and it's typically the most common source of financing in the early stages of a business. You'll see here, the nice thing about this as you're starting out is that it gives you control over the company. As you start to get more into like the angel investors and venture capitalists, they may have invest in the company but take a percentage. And so the nice thing about having using your own money for the business to start it up is that you have complete control over how things are run. And some small business owners do utilize things like home equity lines of credit to obtain loans with having their homes as collateral. So we do tend to see that as well. The other form of financing that you may see early on is either crowdfunding and peer-to-peer lending platforms. And so this is raising money by soliciting small individual investors or getting contributions from a large group of people who are, so it's really a good fit. Crowdfunding or peer-to-peer lending platforms are a good fit for folks that are looking to raise small amounts of money, maybe want to grow, have an idea, and are kind of getting into, have done it a bit longer than just the startups. Do any of you on the line have experience with crowdfunding or peer-to-peer lending platforms? Any of you taken advantage of those options?
I didn't have a crowdfunding or financing, but I did do a pitch contest to win some money, and it was a small amount, but it would help me with the application process for my business, which is a medical transportation business.
That's
So
great.
that's, yeah, I don't know if that was on the list, but I just wanted to add that pitch contest sometimes win you some money.
Yeah. And sometimes you'll see that through like like entrepreneurial organizations, like Pathstone, right? Where you have these grants that may be available.
Maria, can you mention some peer-to-peer lending platform?
Sure, I'm gonna tap Ilsa because she may have a little bit more information to provide here.
Yes, yes. Actually, I would definitely advise you to go to grant.gov. So it's a website, and that you can just put the projects that you're looking to do, and they can actually you need to complete kind of an application, and they can help you going to the next step in trying to find some grant. We also look for banks. I mean, believe it or not, there are some banks sometimes that they offer grants for small businesses, especially businesses that are starting up, right? Or maybe small businesses that they help the community. The branch, actually, they have those incentives, and they provide grants, usually are between $10,000 to $25,000. Actually, here at Citizens Bank, we are offering grants for a small business that are owned by women, right? And a small business that they are help the community as well. So I think that is a good place to start.
Can you talk about also
Yes.
what they fund? For example, do they fund computers or office equipment, or specifically in that 10 to 25, what do they fund from a bank perspective?
Well, usually the grants, you need to talk about you and your business, right? You need to provide a little story behind, how did you start it, right? And what are you looking to do with your money, right? So based on that, the banks usually they are like for example, right now at Citizens Bank, we are working with those grants, and they pick those businesses that they help the community, that they need the money maybe for expansions, right? They need money to hire more employees, right? So basically, you need to talk about you and your business, provide that application. They're not going to check your credit score. They're not going to check either your business or personal credit score. That's why it is a good way to start to fund your business to that little extra money.
Did you say they will check your personal credit or they will
No.
not?
They will not. In grants, when you apply for grants, they won't check your credit score. They go based on you and your business history, what you do for the community, right? What you're planning to do with the money, right? All of that they take in consideration.
Okay, thank you.
Mm-hmm.
For the crowdfunding, I was gonna mention I'm not open yet. I'm still in the planning stage, but I want to use crowdfunding. For like the most popular one is obviously like Kickstarter, but Kickstarter like only does like inventions, and they focus like on artists and types of things like that. Like you have to have all the money before you can, like you have to say, okay, I want, $200,000, and if you don't get those $200,000, like you have to reach that goal or you don't get the money. I think that's with most crowdfunding platforms, but it's also just for inventions. So if like you want to do like a mom and pop shop or like a brick and mortar store, then like that's not going to work for you. But there's a crowdfunding platform that's for that, and it's called Mainvest. So it's kind of like crowdfunding like Main Street. is like the idea behind it. I could type it in the chat, but I was going to mention that because you asked.
Yeah, these are really good resources. And, I think, it's places like sometimes you wouldn't even, you wouldn't expect to find grants. Like I didn't know about grants.gov, and I know the banks do grant applications like this for programs and businesses that really help their communities, but it's places that sometimes you just have to, I think when it comes to crowdfunding, you just have to find and search these opportunities out. But it's good to know that they're out there. And so mainstreet.org, you said?
I put it in the chat. It's mainvest.com. You do need so they have like a certain process you have to go to. Like you can't just, anything can't be put on it.
Mm-hmm.
And they have like a bad actor check to make sure like it's actually going to be a business. And you have to have
Right.
you have to be incorporated. So you have to, there's a few steps.
Getting a little feedback here, guys. You can mute.
That you have to go through before you do it. And I think it's you have to have 10 people that you know personally that are invested in your business as well. So you have to have so it gives you some good credibility.
Yeah. And I see GoFundMe, Kickstarter, are some other options that are being shared here, which is great. Yep. All right. Let's take a look at another option that we have. And so beyond the self-financing, crowdfunding, you'll see you have the opportunity to go with angel investor, venture capital firms. So for this, I think the most relevant example is like a Shark Tank kind of style, right? Where they provide funds, but will have an exchange for equity in your business. So you want to they want to understand your structure, your business plan, what the potential is for growth. And so our advice here is, if you are considering an investor, like an angel investor, a venture capital firm, that you do your research and kind of see, is this somebody that has the same values and vision for your business that you hold, because they will have a ownership stake in your business, and so it's important to kind of consider that option as well. We also have community development financial institutions and other nonprofit lenders. And so I think Pathstone is a really good example here, where you have, they're nonprofit and they offer small business loans, and they do that through grants that they receive through government programs. You can get information here, but you'll see, like I mentioned, Pathstone is a really good example of this. And I know that they do a lot of different training programs through in the community to help fund small businesses. And then the last, for an established, mature business, banks and credit union are also a place that provide financing options. Typically, you have to have been in business for a certain period of time and have a record of how your business is performing, and be more established to get lending from a bank. Yeah. And I do have a recommendation. So Leah, you're on it today with finding financing options. Thanks so much for sharing these opportunities. We have a YouTube video on how to get money from angel investors. Elsa, do you want to maybe talk a little bit more about, banks and credit unions and some of the products that we are able to offer, and, some of the things that we may look for in small businesses?
Yes, absolutely. I always hear from my business clients that they say, oh, I'm a new business. I need to establish my credit, right, for my business. I don't know, how can I start? Or sometimes business owners, they're assuming because they are a new business, they won't qualify for any credit at all, right? So my suggestion would be, trying to apply for a business credit card that will help you to grow, to grow the credit score on your business, right? But also overdraft protection, right? Normally for overdraft protection, the bank won't ask for a long credit score. They're not going to ask you like how many years have you been in business. As soon you open an account, the banks can offer you an overdraft protection that will help you to start to create a credit history on your business, right? Depending of the industry, you may qualify for a credit card right away, or sometimes you need to wait, I'll say between 6 to 1 year to apply for a credit card. But business overdraft protection is the best way to start to build your credit, and also will protect your account, will protect your reputation, right? So in case if you don't have the money into your account to cover a check, for example, for a vendor, right? That check can get paid for from this overdraft protection line of credit. So think about the reputation that you start building with your vendors, right? Even with your employees, right? You don't want to write a check and your employee is going to cash a check and the check bounce, right? That is really bad for you and for your employees. So this type of a protection will help you with that, and also to build your reputation with the bank as well, right? Because when you are looking to apply for a loan or a business line of credit, the bank will check your transaction, right? The bank will go back usually 3 months and see, okay, how you're doing with your business, right? So if you have any overdraft fee, if your account was negative, that is not a good sign for a bank. So be proactive and protect your business with this type of services. That will be my suggestion or my experience.
Thank you so much. I think that's such a good suggestion too. And I think also just having and establishing a banking relationship, like having a checking account is really important, and making sure that you're establishing that relationship with the bank. And I can, I know that for, when we had the PPP loans, a lot of the times those loans were, they were open to, I think you could apply if you had a checking relationship, right? So I think having that relationship with a bank and establishing that early is a good way to kind of really work on that, establishing the relationship with a bank or a credit union.
Absolutely. In my opinion, it's just be proactive, right? We all learned the lesson with the PPP, that they're all looking for loans, line of credit, right? To keep their business alive. So, but I think that businesses, they need to be proactive and they need to prepare themselves, building their credit, even though maybe they don't need the credit right away, but just building their credit over the time. So when the time comes, they're good look, they're in a good shape to apply for lending.
Yeah. Very good. Very good. So hopefully you have all established banking relationships, and I think the overdraft protection is something I hadn't considered before, but definitely very something to think about for sure. Okay.
I have a quick question.
Of course.
This is Quinnia. Okay, so I have a relationship with Citizens Bank. I do have on file my DBA. I was wondering, because I'm trying to do an LLC, if I upgraded my LLC, would it look more beneficial that I'm actually taking the business to the different level, and that I may be able to get grant, or not grant, but a loan because the DBA is about 10 years old and I've been responsible, but I never had a credit card with the DBA. Mm-hmm. I just had like a Visa card that comes with it, mm-hmm. which I never used. So should I be using that now? Should I be trying, like, how would it make, like, would the LLC help, and how would trying to get the credit card and starting to use it for small purchases and repaying it, how would that help me?
But actually, that is a good question. Sometimes when businesses they're growing, right, or maybe when you talk to your CPA or your attorney and they say, "Hey, don't have a DBA, it's better get an LLC or corporation, right, for liability, right?" I mean, that is one of the most important reason why businesses they convert from DBA to a corporation or LLC. Now, the good news is you're not going to lose your credit history, right? If you're been in business for 10 years as a DBA and now you say, you know what, I'm going to have my LLC, we considering the time that you've been in business, okay? So most of the time, you can still use the same account, right? In which is, upgrade the title. And if you have an EIN number from your business, we put the EIN number, right? But that history that you have with the bank and as a DBA, you don't lose that, right? So it's definitely a good point to start is just talk to your banker. You can say, you know what, I want to build my credit. I want to build my business credit, right? And, one option is the overdraft protection, which is very easy, simple. And the other one is the business credit card that, again, you need to be in business 6 months or 1 year. So you've been in business for 10 years, you definitely qualify. You're welcome.
I have a question for Ms. Green.
Yes.
You said if you had a DBA like for a long time and you want to switch to a different business structure, you won't lose the history.
Yes.
But what if you didn't have a bank account? Because I had a DBA, but it didn't have a bank account. Do I have to like start all over with my history?
Well, it depends. I mean, the underwriters will ask you for the business certificate, right? When you register your business as a DBA, you get a business certificate. Okay.
I have that.
Exactly. So, that the bank want to see the experience, how many years you've been in business. Most of the time, DBAs, so sole proprietor, they use your personal account. They shouldn't use your personal account, but
yeah, I'm finding that out just recently that I should have had the account in the business name, not my name.
Absolutely. That is the first rule. As soon you want to create a business, even though if it's a DBA, set up a DBA account, set up a business checking account, right? But, that is something that we can explain to the underwriters. I have customers that they have an LLC and they use the business account, but they use the personal checking account, right? So that is something that we can explain to the underwriter. But if the bank want to confirm how many years you've been in business, we will ask you for the business certificate.
Got it. Okay, so I didn't necessarily lose all the history, even though I don't have the bank account yet.
No, but open your business account because
As soon as possible, ASAP.
Exactly.
Okay.
Yes.
Thank you.
You're welcome.
Yeah. That's good advice.
Could I ask a question about that as well?
Yeah.
So I've had my business for I think I'm pretty sure it's been over a year now. But the thing is, I went through my bank when I was establishing my other small business, and they suggested that I just get 2 checking accounts as well. So now my DBA and my LLC are the money goes into the same account, and it's a personal account. So would you say that I also need to immediately get a business account, because I guess I didn't think about that, or I didn't realize that, and basically the bank just gave me the wrong information if I'm trying to get, financing anytime soon.
Yeah, well, I mean, I would just check with your bank, because if you have an LLC,
Yeah.
you should have a business checking account under that LLC, under that business profile, right?
Okay.
Under that EIN number, under that business name.
Yeah.
So obviously you can have a personal checking account, and obviously, if you need to transfer from your personal to the business or vice versa, you can do that, but you shouldn't have a personal account under a business profile, because you have your social security number.
Yeah.
And as an LLC is a different, we call EIN number, or sometimes they call tax ID number, but
Right.
they're two different profiles. So I would definitely check with your banker and see what you have.
Okay.
Yes.
Okay.
And that may be why they gave you two accounts. Maybe one is personal, one is business.
Yeah, that's what they said, and they said that it was something about like fees and like minimum requirements and whatnot, that this would like give me less problems, but if I can't get finance, you know,
Mm-hmm.
you know,
Yeah, and I mean, obviously, you want to keep separately, right? You want to keep what is personal and what is your business in two separate accounts. Maybe that's why they told you, okay, have your personal account as well.
right.
I mean, usually it's easier for you to have, I mean, this is my opinion, and I'm talking about my parents, experience when they have their business and I help them. Just trying to simplify your banking, right? Just have one bank. If you want to have your personal account there, if you have your business account there, it's easier. You can have one online profile where you can see your personal and business, right? One place where you can check. So, sometimes I see business, they have a account in one bank and another bank and another bank, and it's so hard to keep track. So that will be my, suggestion. But yes, I would, just check with your banker and see exactly what you have and what are the minimum requires, because you don't want to, pay fees either for your business account or your personal account, right? So there are ways that all banks offer you to waive those fees.
Okay. Thank you.
You're welcome.
And I think, it's always a good best practice too, I think is, and we recommend this for anyone, whether you have a business or not, just sitting down with a banker, maybe once a year or more frequently than that, is always a good idea to kind of just make sure that, because banks come out with products and programs all of the time. And so I think just sitting down and having the conversation of where, how do you, are you in the best account for you right now? Sometimes when you sign up for a product, banks improve it in like a year, and then you're paying fees for something that they no longer charge fees for, but because you're in that old product, you sometimes have that. So I think that's why having those regular check-ins with a banker is always just really a very beneficial, just to learn. It's almost like I always do this with my cable company. I always call them like every couple months, like, is there any deals? Is there anything good? I think that we operate the same way, right? So good to follow up and get a sense of like, what are the fees now, and are your accounts still working for you in the same way that they were when you signed up for them?
I agree.
Good. All right. So as you remember, we've been working with our example of our juice shop,
Maria,
and yes.
I had my hand up.
Oh, I'm sorry.
Can you talk about the credit card, the business credit card? So when you have a account open, and the bank says, "Do you want a business credit card?" Or it sounds like you should say yes to that. Do you have any idea like how that works? Like, do they give you a certain amount, or how that part works? Because I try to be credit free as possible, as much as possible, and stay to the zero balance. And so I was like, no, I don't want a business credit card right now because I'm just trying to manage everything. But I know I need it, but I wasn't sure about the process. So can
Oh
you
yeah.
talk a little bit about
Oh
that?
yeah. Trust me. I'm from a Latin America country that everything is cash. Even my parents now, they paid everything in a cash, and always is that feeling like oh, I don't want to get a credit card. I don't want to owe money, right? But you need to build your credit, right? So that different option. If you are a brand new business, you just started your business, you register your business yesterday, right? You go to the bank, you want to open your business account. Um, you know, probably you won't qualify for a business credit card because you don't have like a cash flow history on your checking account, right? That is something that the bank will want to see. Okay, the money that is coming in and is coming out from your account, the bank want to see that. So usually you need to wait 6 months usually for apply for a credit card. Okay, that depend of the bank. In my experience working in Citizens Bank, it usually is between 6 to 1 year. Now, what you qualify right away, something that the bank won't ask you to see, your cash flow, right, is the overdraft protection. That is something that you can request and ask to apply right away, which is a small line of credit up to $10,000, which is linked with your business checking account, right? And you only gonna use that when you don't have money to cover your account. It's like an emergency, right? But that is the first step where you can start to build your credit for your business, because the application is going to be under the business. So the banks really like clients who have this overdraft protection because you want to protect your relationship with your bank. You want to protect your relationship and your reputation with your vendors and employees and clients. So this overdraft protection will be the basic step. Now,
Can you use that for purchases?
Yes, because if you don't have money in your checking account, for example, you're gonna buy something with your business debit card, right? So you go to the store, you're gonna buy supplies for your business, you use your business debit card. We're gonna check the money from your business checking account. If you don't have enough money to cover your business checking account, right, automatically we're gonna pull the funds from this overdraft protection line of credit. So it's not something that you can go to the bank and say, oh, I want to take cash for my overdraft protection. No, this is it's just to cover your business checking account in case you don't have money on that time.
Now, is there a high fee for that? And then how long do you have to pay it back?
Yes, it's an annual fee. The annual fee is $39 usually, and the interest rate is, I think, is around 12% for the interest rate. So again, this is just to protect your account. If something happened, my advice is it's the same thing with the credit card and with any type of debt. Pay it before the billing cycle, right? Use it when you need it and pay them back, before the billing cycle, so you don't get charged for with interest, right? And also will show that your debt and your business are under control.
Okay, thank you.
You're welcome.
These are such good questions, and so I'm happy everybody's contributing and asking these great questions. Thank you so much, Elsa, for being on the line. And I think you have such a great experience working with small business owners all of the time. So this is very good insight. Okay, so let's talk a little bit about our juice shop. As you recall, we have this wonderful juice shop we've been working on, and it gives you the specifics here. So we offer orange juice at $8 a glass. So far, we have one store, and we have good news. The juice shop is doing really good, and we've decided to expand to a second location. So the expansion is going to require us to get some capital. And so based on what we know about the juice shop. At what stage do you think our business is in the scale here?
I think it's in the
I would
maturing
say,
stage.
or I would say established because they start in the second one.
Yep. Yep. So you're both right. It's that maturing, established phase of our business. That is where we are right now. So we're reporting a profit, and we're doing well enough that we have a strong plan. We have positive cash flow, and now that opens up the opportunity for us to expand to a new location and to finance that. We do have some additional options to obtain financing. And so now I want you to start to think about your own business. If you think about your own business, where is your business in relation to this scale? So we're going to spend some time considering your own stage, and we're going to work together in some groups here in just a moment to consider what are the financing options for you based on the stage of business that you're in, if you have a need to raise capital. And so why don't let me stop sharing here for a second. And we can get into some groups. But if you want to actually, before we do that, if you want to just in your chat, just share what stage is your business currently in, if you were to evaluate your own business. And you can type it right in the chat. So I see some responses starting to come in here. Good. So I see a lot of early stages, maturing, a few ideas. Yeah. No worries, Sonia. Perfect. Perfect.
What's funny is I thought I was at one stage, and then I had to go back. And so, in an effort to, get all my ducks in a row and all of that, it's challenging because I see my business in one place, but as I've taken more classes and learn how to successfully run a business, not just do my business, I'm learning, oh, you better, get all your ducks in a row. So.
Mm-hmm. Yeah. And this can fluctuate, which I think is really important to think about too, as the juice shop is a good example, right? So maybe as we start and open up a new location, there's going to be a learning curve to getting that up and running. It's not a given. We've learned a lot from the previous location, but there may be some key learnings that we need to just acclimate ourselves to that new market and new customers. And so there's a lot of, I think this is a nice thing to think about, is that it's always progressing. It's but I think it's important to also consider what stage your business is in and what are the options to raise capital that you may have depending on the stage that you're in. So I would love it if we could spend a little bit of time working in groups and maybe having a discussion about the stage your business is in, and perhaps I think the idea sharing has been very, very valuable in this series of in this session in particular. Just maybe having that discussion of where are the places that you've considered getting funding from, and what are some other things that you may not have considered that may be available to you. And so in a moment, I'm going to put you in some groups, and what I would ask you to do in your group is think about, not only where are you in your stage of business, whether it's startup, early, maturing, established. We have a lot of early maturing businesses on the line here with us. And you're going to think about what are the different sources of financing that you've received, and we're just going to take 5 minutes to have that discussion so that we can think about, and perhaps learn from each other the sources of funds that are out there and available to us. So let me stop sharing real quick, and I will put us into some groups here. Actually, you know what? We have a small enough group that we may stay together instead of breaking out into another session. So I'll just leave it like this, and then maybe I would love to hear from you all if you have. Let's see, there we go. So where are some of the places where you have tried to get funding from for your business? What have you explored thus far? Or is there anything you'd like to learn more about?
Well, for me, I've been applying for lots of grants lately for my business, and I'm looking to start a nonprofit. So hopefully the two can piggyback off of each other. Also, I've been looking into angel investors and family members and friends to invest, but I'm glad that I was able to make it to class today because I'm definitely going to be on grants.gov with Aaliyah's help and Miss Elsa's suggestions. Like, those were really good suggestions because I feel like I have what I need and I'm on a good path. I just need capital and funding, and like, because like money makes your business go further. So I don't know, that's where I am at the moment.
Perfect. Thank you so much for sharing that, Genevieve. And the grants are nice too, because a lot of the times they are like, you don't have to pay them back. So I think, like, what a great way to get that instant cash influx. So grants.gov is a good one. And I know Citizens right now I know Ilsa put the website up. We're running a grant program right now, Community Champion, and I can share with you, the website is here, but I can share with you my screen so you can kind of see the application for it. So Citizens right now, and banks are doing this, right? So we have the Small Business Community Champion Award. And so I do think it's a $10,000 grant that small business owners have access to, right? And Elsa, I don't know if you want to talk more about this specific one because you put it in the chat. So I wanted to take a look, but you see the rules are here.
Yes, what is important again for these grants, the banks, they don't care about your credit score or your business credit score, right? They care about what your business is doing and what you're doing for the community, right? So just, type something, a story about you. I don't know, this is a family business. I started in the basement creating this. I working with my family, like tell us that story behind. Every business has that passion, that story, right? That how you started. So and oh my gosh, it's so excited when we call those clients and we say, hey, you're being selected, you got this $10,000. I think this is the best part of my job, when we're being able to help small businesses. And again, this is not something that Citizens Bank offer. There are other banks that they offer this type of grant, right? Special to support small businesses and minorities, right? So please go through. You don't have to pay to apply or anything. Just tell us about you and your business.
I had a question.
When you say like something to help the community, does it have to be the local community? Because my business is online based. It's not like brick and mortar in the local area.
Yeah, no, I mean, again, it's all about how and how did you start it and what are you looking to use these funds, right? So, you're planning maybe to hire someone else to help you. You're planning to integrate this online service or platform that you have and help, I don't know, other people to get access to the platform, right? Just tell us about you and your business.
Got it. Okay, thank you.
Yeah. Mm-hmm.
And can you find this application online?
Yes, you can go to the link that I sent. I sent the link in the chat. It's also is on the Citizens Bank website, but I also sent to Maria.
Yeah, I
an
just put it
email.
on again.
Okay.
I just put it in the chat again. So if you copy and paste this
And you
address,
click on it.
Yep,
Yes.
it'll take you right to that page we were just on. And you can see what the application looks like, and but it's good that banks try to do that to promote and business growth, especially lately. I think there's been such a push in the financial services industry to do these types of programs and offer grants like this.
Mm-hmm.
When do the events happen? Like, is it a few months from now, or have we missed the deadline, or does it just keep reoccurring?
I want to say it just opened a few weeks ago, right, Elsa? I think it just opened a few weeks ago, and I think I want to say you have until the end of the month, but I exited out of it. Let me see if I can find that question.
Maria, is the chat room is that saved too, or should I hurry and screenshot it before the session is over?
Yeah.
For the recording?
Yeah, like will I be able to see the chat also?
You should be. Yeah, you should be. And I
Okay.
can send this to Zach afterwards if you want to, we can certainly send that link to Zach so he can send up an email blast too.
Well, also hopefully you will remember all of us, and someone from this Buffalo class will have that opportunity, or all of us.
Awesome.
I saw a couple of Buffalo businesses on there, so that was
Yeah. It is exciting to see when the business owners get the grant funding. It's exciting because you're making a big difference. That money
Oh,
it's
yeah.
it's a lot of money.
Yes.
I'll share because I'm on the other end of the spectrum where I have, self-funded and kind of, I don't know, maybe I just wasn't being smart about it, but I thought, I don't want anybody else's money. I want to make my own money and fund my own business and do it myself because I'm independent and I can make it happen. And I've learned from my first Pathstone class that I took about the word collaboration. And you can't do it all yourself. And if you really want to scale to a certain level, then you've got to, open up. And so, I just try to, absorb as much information as possible. And because the financial part is the weakest area for me. I know how to do the work I do. I help the community. I give from lack. And now, obviously, just working to the other side. So that's frankly speaking for me, because I've always had a business. I'm sorry, I've always worked for a company, and then my business was sort of on the side. And now my business is full time, and I'm learning because I was afraid, if I can speak frankly, like, what if they don't accept my company? I'll go through all this work and then, I don't get what I need. And so before I do that, I'm going to do it myself. But I'm learning now, and I'm an LLC and I'm working on the minority certification, and the work that I'm doing for the community is great work, but just knowing how the financial part works is, um, you know, why I'm glad that this was offered and excited to learn. I'm on that end. Frankly.
Oh, phenomenal. I think it's so important. And you're right. And I think, there's that sense of community too, I think just helping your business to thrive. You can't always do everything by yourself. And so knowing the resources is really an important piece too, I think. Good. Anyone else have a good best practice? I see you have your hand raised here. And you may be on mute.
Okay.
There you go.
There. Okay. So I did put in the chat I saw other people were putting stuff in, especially because we're startups. I think that some of us are afraid to get our idea out there. I did use a pitch contest, even though I don't want someone to steal my idea. But but what I found is that somebody could take your idea but not have your heart and passion. So if you're looking to start a business and you are comfortable enough to pitch the idea to a group of people, a lot of them, I put a link in there that they're online pitch contests. So you can sometimes it's like, send us your video and we're going to decide. Or sometimes it is an audience and then you become like a fan favorite, or it's just different ones. So I put in the link there that there's a Growth Mentor blog that shows the top 12 for 2022. So if you're interested in that, and then you can also go on YouTube and watch people pitch if you're not comfortable doing it. You can still go on YouTube and witness other people and how the process worked for them, and try to do that. I mean, I love grants and I love free money, but it's something about getting your idea heard by other people and getting feedback that you're not going to get from the loans and you're not going to get from the grant people. I mean, they may say, oh, you need to get the financials is not right, so you need to fix the financials. But it's something about feeling other people liking your idea and wanting to support you that's a little bit different with pitch contests. And it's an easy way to practice your elevator pitch or giving your idea to to other people to see if it's going to be viable. That's all I want to say.
Yeah, no, it's great information.
Thank you.
Great feedback,
Yes.
I think.
Maria, I put something in the chat. I'm not it's not really a question, but it's more like a comment. But can you comment on the comment? I'm not sure. There's no real question on there, but I was curious about it.
Okay, let me see if I can go back. I missed it. It's hard to find ones you qualify for. Yeah. Also, I don't know if you have any thoughts. I don't know. Can you read the chat?
Yes, I read it. And I feel when you're looking for grants or when you're looking for any type of information, lending information, go to valid resources, right? .gov.org, right? And again, I mean, I know that trying to get grant, you need to dedicate time and effort, right? Because you need to apply, you need to talk about your business. It's not because you apply to one place that means that you're gonna get it. In my opinion, what I learned from my business owners, talk to other businesses owners like you. I think that this is a great opportunity that we are all here together, and ask them about other businesses, how they get those grants. I think the referral, when someone tell you, hey, this is the place that I went, right? Hey, trying to apply to this place. It's not easy. I'm not gonna lie. It's not easy because it's grant, right? But I will definitely encourage you to keep applying and keep looking for valid resources, those valid places to apply, because you need to be careful. You're right. I mean, you don't want to put in an application, you're going to put your personal information and it's fraud, right? They're going to take your personal information, right? I agree with you, but don't give up. I know that is tough, but there are programs available to help small businesses. And if you have,
Yeah,
Go
I
ahead.
do have like a grants.gov account, and so like every week they send me like grants they
Okay.
think I might qualify for.
Oh,
Like they
nice.
send it, like you put like things you're interested in, you'll say like woman-owned business. But usually I don't qualify for them, but some of them I have. But what I'm really asking is kind of like, are there like specific rules that say like what you can and can't use the grant money for? Like obviously, like I could pay for an LLC by myself, and that would technically be the start of the business, right? That's when you would say you're established. But if I'm trying to open a cafe and it won't be done until 2 years from now, like, can I not get grant money for like 2 years? Like, what is the start? Because she specifically said like there are no businesses, there are no grants to start a business. But like, what's the start? That doesn't make sense to me. So is it just, or is it just open to like whatever grants? Like if you do find a grant and they're like, yeah, sure, you could spend money on that. Like we don't care. It just so that was
Yeah.
kind of confusing.
Yeah, and I mean, most of the time the grants, they want to use the money for your business, but also to do something for your community, right? So I'm gonna open a cafe, right? I'm gonna open a restaurant, and my plan for that money is to hire 2 employees, for example, from I don't know, from a community next door, or 2 kids for high risk communities, something like if you explain the reason behind, it's not, oh, I'm gonna get a grant because I'm gonna, I don't know, start to make more money or something, right? Usually the grants, they are focused on, okay, what are you gonna do with the money, not only for your business, but also what are you gonna give you back to the community, right? So that would be my suggestion when you enter those grants, to look into that. I will do more research, and I will log and I will talk to my business owners that I know, that I've been working with them for a few years, and also my co-workers, and I was just trying to get some information specifically for your case for grants for a startup business. Okay, and I can get back to you on that.
Okay, thank you so much.
Yep, you're
I'm
welcome.
gonna put your email in the chat, and then that way that would make it easier to get a hold of
Yes.
Yeah, sure.
you. Perfect. Okay, so I do want to be mindful of our time here, and I think we're having such good conversation, and I want to just make sure we're covering. We've talked about some of this information already, but just getting in a little bit more deeply into the credit reporting for small business owners. So when you do get to a more mature and established state, we want to talk a little bit more about the 5 C's of credit, so that we're prepared and understand what are lenders looking for in order to qualify us for different programs, for loans rather. And so the first thing that bank will look at is and criteria is capacity. The first C here that we have is your capacity. So what we mean by that is we will look at the cash flow that the business needs to demonstrate that they have the ability to repay the loan. So we look at how much cash is coming in, how much cash is going out, and if we were to add another obligation, another monthly payment to this business, would they be able to kind of repay that, and what's the capacity to take on more debt? And so what that looks at specifically is the debt to income ratio, and we're going to talk a bit more about debt to income ratio in just a moment, but that is the first C that we consider. The other C, the next one, when we look at the 5 C's of credit, is collateral. So for this, we sometimes when you have a secure loan, the most common one I think for small business owners is a home equity loan or a line of credit. The collateral is the home. So you get lending based on the equity that you have on your home, and you can use the funds to support your business. And so collateral is another way that another one of the things that we take into consideration is there's something of value that we can hold. And if this doesn't get paid, or then we have something to fall back on. The next C is the credit history. So how good are you at managing your debt? And for many small business owners, the credit history we tend to use first is the personal credit history. So if you're a small business owner and you have an opportunity to focus on getting your personal credit to a really good point, and then begin establishing credit for the business. So the overdraft protection suggestion that Elsa mentioned earlier is a really good way to kind of begin to get some credit history going for your business. The next thing that is evaluated with regard to the 5 C's of credit is the conditions. So the conditions here pertain to the loan. So the interest rate, the principal, how does the borrower intend to use the money? And then we also look at what are the industry conditions for your business? So are you in a business that the industry is doing well? There's potential for growth there. So those, are there any regulatory impacts that you may expect to see for that industry that may have a potential impact on your ability to continue to do business and do it well? So that is another thing that banks consider when we're doing lending. And then the last C is character. So for this one specifically, it looks like at the reputation of the business. So what does your personal credit history look like? Are you good at maintaining a healthy banking relationship? That's why having a checking account in the business name and keeping it in good standing is really critical to making sure. It's one of the things that we consider when we're considering someone for a loan. But no matter what stage your business is in, there are 2 areas that you can certainly begin to focus on now to help with these 5 C's when you're ready to move to that step of obtaining a loan from a financial institution. So the first area is capacity, and the second is credit history. So those are the 2 things as you're starting out, if you're in the early stages of your business, that you can begin to kind of focus on to really set yourself up well when you do ultimately get to the point where you're prepared to take on a business loan. So I wanted to talk a little bit more about capacity and specifically the debt to income ratio, because this is something that when we are looking to approve someone for a loan, we focus on. It helps banks determine what is the capacity that the borrower has to repay the loan. And it's a simple calculation. You can do the formula to figure out debt to income ratio is we look at your monthly debt obligations. So these are the things from your credit report. What are your monthly debt obligations? Sorry, I'm having a little trouble with this thing here. Okay, we look at the monthly debt payments that you're making from what is on your credit report, and we divide that by your gross monthly income, and that gives us a ratio that helps us determine how good can you take on more debt. So typically when it comes to debt to income ratio, it's good, if you have a very high debt to income ratio, anything below 45% is considered ideal, right? So to qualify for many programs and products, we look for that ratio to be below 45%. And if you have, if it's not where it needs to be, then you may need to look at ways to decrease your monthly debt obligations or increase income. So there's always something you can do to kind of play around with this to modify it and get it to the level where it needs to be. So you can calculate this for yourselves. If you want to work on calculating this for yourself, you would basically take, what is the debt that is on your credit report? So your living expenses aren't counted. So for example, like your utility payments don't factor into this, but it would be like if you have credit card payments, if you have loans that you have outstanding debt on, those are the things that we look at and divide your gross monthly income, and you can get that ratio.
You wouldn't count like your rent or mortgage either?
Your mortgage you would, because that's on your credit report. Your rent, I don't believe that this, I mean, I do think they will ask that for you to help identify that, but things like your cell phone bill, your electricity costs that can fluctuate, and those things don't get put on there.
Got it. Okay, thanks.
And you can get, there's this website here on Investopedia. You can get more information on debt to income ratio, but it's a really important ratio that helps banks identify what is your capacity to repay a loan and take on more debt. I think the other thing to focus on is building really good credit. So we've talked a little bit about this in our session just now. So business credit cards are a really good way to start to build credit for your small business. And the overdraft protection that Elsa mentioned too is another really good way to start to look for establishing credit for your small business.
And
When you're
Capital
choosing,
One,
go ahead.
Capital One has a great program for starting credit, where they give you a business credit card. They usually start it at 500 and it just keeps jumping according to your payments or whatever.
Yeah. Is it a secured credit card? So you would have,
Yes.
sometimes you see programs like that where you have to have $500 in your savings and then they loan based on that.
I didn't have to do that. They just
Great.
started the credit card off at 500 and keeps building in the business name. It's in the business name.
Phenomenal. And that's a really good way to establish credit, right? I would say too, when you're looking and shop around for credit cards when it comes to business credit cards, and take a look at what's the interest rates, what are the annual fees, are there any rewards that you may get from that, and benefits that you may get from having the card, because you can really be, that's one of those things that you could really shop around for. Any other tips, Elsa, on the business credit card?
Well, I totally agree with you. It's like you need to check in different banks. You need to check online and see different promotions. I know that for business credit cards, sometimes they offer a longer billing cycle, which is pretty good, especially for business client, right? As you guys know, for personal credit cards, the billing cycle is 30 days. So the trick, and I just want to make sure no one can hear me because I'm working in the branch right now. So like that, the trick is pay before 30 days to avoid to pay interest, right? But there are some credit cards for businesses that the billing cycle is 50 days. So you have 20 more days to pay back the car and void to pay interest. So definitely check online, call banks. There are some banks that they offer you, for example, if you spend in the first 90 days $1,500, they give you 5,000 points, right? Or stuff like that. So definitely shop around.
Perfect. So I just have a quick video to share with you on building great credit for your business.
How to build my business credit fast. Are you ready to build business credit quickly so that you can have all of the funding that you want and need for your business? Well, you are definitely on the right track. I'm going to tell you exactly how to do it with no fluff so that you can get all the funding that you need ASAP. Let's go. I'm going to share with you the quick and easy 3-step process to building business credit fast. I'm going to share with you the biggest secret that my student taught me about building credit as a newbie in today's environment. And last but not least, I'm going to share with you the biggest trap and biggest mistake that you can make when you're building your business credit and how to avoid it. So let's first talk about business credit versus personal credit, because there are some major differences. Business credit is much different from personal credit. As you already know with your business credit, you have 3 different bureaus. You have Experian, you have Equifax, and you have TransUnion. But when it comes to personal credit, it is very much different. They are looking at how well you pay back your debts and what your debt ratio is. So if you have trade lines on your personal credit, you will notice that they are reporting all of your credit cards, all of your mortgages, maybe you have some student loans, and maybe even have a car note. And all of the trade lines will be there based on the types of trade lines that you have, whether it be revolving accounts or installment accounts. And they also look to see what your mix of credit is, how long you've had those credit trade lines, and how well you've been paying them. And they will give you a FICO score based on this algorithm with a mix of all of those things that I just mentioned. But when it comes to personal credit, what you really need to know, and the very important part is, they will hurt your credit or you can lose points as you start to use your personal credit cards. So when we're talking about building a business, it's actually very difficult and sometimes very detrimental to your personal credit when you start using personal credit cards to fund your business. And this is why you're going to want to use business credit. Business credit also has 3 different bureaus. They have Experian Business, they have Equifax Business, and they have Dun & Bradstreet. Dun & Bradstreet is the #1 credit reporting agency for businesses. And this is the juggernaut. They've been around doing it the longest, and this is what you will hear mostly talked about when we talk about business credit. So let me share with you how you can get yours going. So the important thing with business credit is to start now. Starting now will actually get you ahead of the game. And it's probably one of the biggest mistakes that I made in my own business, and one of the things that slowed me down a bit because I did not learn about and start on my business credit sooner. Please don't make that same mistake. So let me tell you my story really quickly and how you can avoid some of the mistakes that I made. So as many of you know, I started as a real estate investor. I was in my parents' basement, dejected and sad around 2009. I started investing in real estate in 2002, 2003, but I had no idea what I was doing. I was flipping houses with a job. So along comes 2008, 2009, the market crashes, and I pretty much lost everything, ended up in bankruptcy with multiple foreclosures and back in my parents' basement. What a disaster. So from there, from my parents' basement, I actually found a coach that taught me some things about real estate investing that changed my life. He taught me wholesaling, and then I went to fixing and flipping. Eventually, I started getting rental properties, and I eventually quit my job because I had enough rental properties and income from those rental properties to replace my income. But along the way, as I was doing all this real estate investing, I never built my business credit. I was kind of a disaster with that. So I never really got into it. I had a business license, of course. I had an EIN number, but I was missing out on hundreds of thousands of dollars in business funding. And now today, I have millions of dollars in business funding. And that was a mistake because I could have had that a long time ago. And I literally could have quit my job a lot sooner had I known the things that I'm going to teach you next. So let's talk about how to build business credit fast. The first thing that you want to do is actually set up the business. Because you're watching this video, it lets me know that you are smart and on the right track. You know about business credit, at least you've heard of it. So make sure that you go through these steps really quickly because you can actually start building your business credit and get business funding without actually making profits in your business yet. The first thing that you want to do is set up your business. You're going to need to name your business, get an LLC or an S Corp or a C Corp, essentially register your business with the Secretary of State so that they can find you. Go ahead and get your EIN number, which stands for Employer Identification Number. And this is completely free if you go to irs.gov. And the important thing about the EIN number is it will be your business's social security almost. It's how the IRS will identify you as a business, and it's what you can use so you can start getting away from personal credit and into business credit. You will really start using your EIN for everything using the information that I'm going to teach you. You also want to set up your phone number for a business, not just your cell phone. You want to get a business phone number, super cheap. I'll give you some links below. You also want to set up a business email, again, not me@gmail.com, but a real business email such as noel@abcproperties.com, just using that as an example. And then finally, you want to get a business checking account. Once you have this done, you are going to be 10 steps ahead of most businesses, because now you can go ahead and get your Dun & Bradstreet number and get a business profile for your credit setup. So now let's talk about how to get that Dun & Bradstreet credit report going fast. Like I said, if you follow the steps that I just mentioned before, you will be able to get a free Dun & Bradstreet number just by going to dnb.com. Again, this is completely free, but you must have all of the things that I said. And you literally can get all of those things set up in a day, depending on what state you're in, okay? The next thing, once you go to Dun & Bradstreet and you apply for that number, they have a weird process. They're going to mail you a code, okay? And they're going to mail it to the business address. And that's because they want to verify that that is truly a real business address. You don't want to use a P.O. box, and I don't recommend that you use your home address. However, if you have to, go ahead and do it, and you can change the address later. The key is getting this done as soon as possible so you can start getting trade lines on that business credit report as soon as possible. Once you go ahead and you get that code in the mail, go back to Dun & Bradstreet, register your business, and you're on your way. Now, I'm going to give you a quick tip. They're going to try to sell you something, okay? They're going to offer you a service where they can build your business credit a lot faster. Again, you're an adult, you can do what you want, but take it from Noelle. I actually did pay the money to do that, and I got 0 results. Not saying anything negative about Dun & Bradstreet. I just did not find any success with that fast track thing that they gave you where you pay for expedited services, where you can add your own business trade lines. It just didn't work for me. I had a ton of businesses and vendors that I was already paying, and I tried to add those trade lines to my report. So again, beware, it's something that they're going to offer to you. I don't necessarily recommend it, but again, you're free to do as you choose and check it out if you want to. Now it's time to start getting trade lines on your business credit. Like I said, I want you to do this fast. The first thing that you can do to completely get trade lines up there in a very quick way, and I'm talking about weeks, not months, is start with vendor credit. Vendor credit is where they will offer you an invoice. Essentially, there's companies, businesses that lend to businesses in a small way through a process that we call vendor credit. Those 3 companies that I recommend, again, not being paid any money to do this, are Uline, Granger, and Quill. I have a whole video that I've made, so I'm not going to get into all of how you do it really quickly. I'll make sure to put a link below, and you can check out that video as well. But those 3 companies, I know for a fact, all report to Dun & Bradstreet, and they do it pretty quickly. You can even purchase things for your business, which is what I recommend. You just have to spend at least $50. If you spend $50 and you set up a free business account, again, this is completely free, they will offer you, in many cases, where you can get those items, you buy their product, you get them right now, and you don't have to pay for them for 30, 60, or 90 days. We call this net 30s if they give you 30 days, net 60 if they give you 60 days, or net 90 if they give you 90 days. In the beginning, when you first start, you may have to pay for it cash, but that's okay. Even if you do a cash transaction, they will still report that to the business credit bureaus, and you can start getting business trade lines quickly. Last but not least, now that you have some vendor credit reporting, you can move on to store credit, which is credit cards from stores such as Chevron gas station, Shell gas station. They offer fleet credit cards to new businesses. You can also get store credit at Walmart, Costco, Dell, and lots of other businesses. Even Amazon offers business credit cards now to newer businesses. And then you'll be able to move on to cash credit cards like Citibank, Chase, American Express, Capital One, et cetera, et cetera. Again, business credit cards, not personal credit cards. These credit cards will not report on your personal credit report. They will report either to nowhere in some cases or to a business credit bureau. The great thing about it is you can use those credit cards as you please without your personal credit score being affected up and down as you use them. It's amazing and it's life-changing for your business. Imagine what you're going to be able to do in your business now that you have all of the money to fund your inventory, buy marketing, pay for ads, and things of that nature. You can really grow your business quickly with business credit. I'm a living example. Final step, the final step is go in and check your credit report. Yes, you are going to have to pay a small fee. I think at the time of me making this video, it's around $20 to check your Dun & Bradstreet business credit report. But you need to check to make sure that the trade lines are reporting. If you are confident that they are reporting, you don't necessarily need to pay the money, but I strongly suggest pay the little bit of money and check out your credit report at least a few times a year to make sure that your trade lines are reporting and to see what your Paydex score is. Dun & Bradstreet has what they call a Paydex score, and this is similar to their version of your FICO score in the personal credit world. A Paydex score over 80 is an awesome Paydex score, and I have students that have gotten that credit score in a matter of months, okay? So this is something that you can do. It's being done every day, and I wanna make sure that you do it too because there are a ton of benefits, and this will unlock hundreds of thousands of dollars for you and your business and make sure that you're successful.
All right, I do want to be mindful and respectful of your time here. We can certainly send out the link of that video also to everybody. But I know we're a few minutes over here, but thank you so much, everybody, for joining this session. And if you have any questions, please don't hesitate to reach out and ask. But thank you so much for the participation and sharing, and we will see you in a couple of weeks.